All right, hey guys. So today I'm going to do a mini course or workshop on opening range breakouts. We've traded quite a few of these in the past few weeks, and I wanted to show you guys what I look for and how I go about trading them. So let's get started. All right, what is an opening range breakout? This is a momentum-based strategy that focuses on placing a trade once price has broken out of the opening range, which can be the first 1, 2, 5, 15, or even 30 minutes of the day. Really any time frame you want, but these are the most popular. I normally trade the 2 and 5 minute, and occasionally I'll trade the 1 minute. And sometimes I'll even take them in the same setup. And what I mean by this is if I'm looking to trade the 2-minute opening range breakout and it fails or doesn't break out, but sets up on the 5-minute, then I'll take the trade on that time frame. I like these faster time frames more because they're faster paced and can offer a more favorable risk reward profile compared to higher time frames. Like if I wanted to, if I waited for the 15-minute opening range, that range is going to be a lot wider. So you'll have to have a large stop, and then you have to hope that it has enough left in the tank to make it worth it. Whereas with a smaller time frame, you can get 2 to 3 times your risk pretty regularly, and that would be much harder on higher time frames. Now you'll deal with more noise and more stop outs on the lower time frame, but the big winners will make up for all of that. All right, also, and very importantly, it's critical to know what type of market you are in. Choppy markets and certain times of the year can make opening range breakouts very tough. For instance, the first earnings season we traded this year had excellent opening range breakouts, but you fast forward to the next season and they were much more inconsistent. So it's always good to track these trades and how markets are trading, especially in slower times during the summer. They can be a little bit harder with the opening range breakouts as well. Usually each earnings season will have some kind of trend or theme on how they are trading. Like just this last season, we had a lot of names that would pop higher out of the opening range, then trade back down through lows before popping back up later and trading higher for the day. So you can take that data and maybe consider a higher time frame opening range would have made more sense. And this is just another good reason on why journaling is so important, so you can find these themes and adjust your trading accordingly. But overall, opening range breakouts can offer some excellent risk reward setups and is one of my favorite momentum plays, especially during earnings season. All right, now let's look at some variables. So the first thing I'm looking for are names that are gapping up or down on a news catalyst, whether that's earnings, upgrades, downgrades, new contracts, whatever it is. I want there to be a fresh catalyst, and ideally it'll have some kind of specialty item, like say for instance with earnings, is there a share buyback or a raised dividend or raised guidance? Anything that isn't already priced into the stock yet. We want something that could cause investors or traders to chase price. I'm also looking for stocks that are gapping up or down on that catalyst, generally around 3%. Now this isn't set in stone. Like say a stock is gapping 2% and meets all the other variables, I'll still trade it if it sets up. That's just a general guideline. I also look at the aftermarket volume. This is important. I like to see at least 20% of the 50-day average daily volume. So if a stock trades on average 1 million shares a day over the last 50 days, I want to see around 200K shares or more being traded in the aftermarket hours. This helps me gauge the interest traders have in it. Most names on earnings will have plenty of volume in the aftermarket, but I like to keep track of it and just make sure I'm trading the names that everyone else is watching. Another important variable is where the stock opens. I want it to open close to VWAP. If it's trading far away from VWAP at the open, price tends to come back and test it, which can make trading opening range breakouts hard. So if it's trading, a couple bucks higher than VWAP, it's hard to get momentum higher that extended away. Usually it'll come back and test VWAP and then make its move. So trading an opening range breakout like that would be tough. I also want to see a test of VWAP when it opens close to it. So we get the open, the price is close to VWAP. I want to see it come in and test the VWAP and then get back up. If it opens above VWAP, I want to see it come down, test VWAP, then come up and close green. If it opens below it and we're looking to short, I want to see it come up, test the VWAP, and then come back down and close red. Okay, that tells me that either buyers on the long side are stepping in or sellers on the short side are stepping in, and then we're looking for the continuation momentum move from there. Like as you can see in this Boeing one, it opened just below VWAP here, came up, tested VWAP, made a push higher, and ultimately failed and almost closed at the low of this candle. This tells me sellers are in control. This is a really strong candle, an indicator that we're going to break down lower. All right, and this brings me to another good point. A large majority of the opening range breakouts I take will be in the direction of the gap. So if it's gapping up, I'm looking to get long that momentum. The only time I take the opposite side is if the stock is super extended and has had a major run into the event or breaking news and is gapping up into that extension. Then I would look to go the opposite direction. But otherwise, I'm always looking to trade in the direction of the gap. All right, so those are the main variables I look for with opening range breakouts. Let's now look at how I journal these trades and what data points I like to track. So to start, I always take a snippet of the 2-minute time frame for the day and mark off the high and low of the day along with the entry, and then write out any important information that I need to know about that setup for the day. I also like to take snapshots of the daily, and if I trade it, I'll post that in my journal as well, just to have records of it. Then as you can see up here at the top, I'll gather the general info. I'll get the date, ticker. If it had earnings, I'll journal those earnings and compare them to what the estimates were. I'll also note any specialty items like raised guidance in this trade, for instance. I'll also track the aftermarket volume that we talked about and compare it to the 50-day average and see what percentage it is trading at relative to that 50-day average. I also like to track the gap percentage. I'll also take note of the time of the peak of the high or low of day. This helps me understand whether stocks are peaking in the morning or in the afternoon on average, so I can have a better understanding of hold times. Then I have the entry and stop, what I'm risking, and the MFE. The MFE is that's the maximum favorable exposure. I've talked about this in other courses. This is basically the best possible price in my favor. So if I was long, it would be the high day. Now, I don't know what this will be, obviously, but by tracking it, I can gain an understanding of what I can expect to make on these moves over time, as I can collect this data and average them out over time, and then I can gain an understanding of what is expected, my expected value on the trade. This is how you build out, profit-taking strategies. So if I take the MFE and adjust it in terms of R, which is how much I make compared to my risk, I can start to understand what I should be looking to make on these trades. So for instance, in this trade, I was risking $1.60, and the most I could have made was $3.09 at the high of day. That comes out to about 1.9 R, almost 2 times my risk. So potentially you could have made 1.9 times your risk. Now if I track these over time, I can get a good idea on what my average R is in these types of trades. If I find out that my average R over a large sample size is 2, then I should be aiming to make that on each trade. That should be my ultimate profit target, to take most of my trade off, and then I can leave on a trailer to see if I can squeeze out some more profit in the trade. But it's important to note that your R is dynamic, meaning it changes over time with different markets. So you need to adjust your trading accordingly. For instance, wanting earnings seasons, maybe a lot of my trades are running 3 and 4R and making big runs out of the, throughout the day. I need to adjust my profit targets accordingly to try and capture as much of that move as possible. Okay, and that's why we journal and keep track of this stuff. All right, so this is just a simple overview of how I journal these trades. Now I want to show you 2 patterns I like to see. The first one here on the left is when it opens on the opposite side that we want to take and then crosses and closes on the other side of VWAP. All right, so this is a gap down and we're looking to get short. In this example, price opens just above VWAP, tries to make a push higher and then closes lower, right? So this tells me that buyers had it and then dropped it and couldn't hold it, and sellers stepped in and brought it back down below VWAP. This is a good momentum signal that sellers are stepping in, and we have a good, there's a good probability that this is going to break down. We'll get some lower prices, and we're going to look to take that momentum when it breaks that candle's low. The other pattern I look for is it opening on the side of VWAP we want to trade, but it runs up through VWAP, fails, then trades back to the right side we want to be on. Okay, this is the one I was showing you earlier with Boeing. This was a short. Price opens below VWAP, makes that big push higher, fails, sellers step in, brought it back below VWAP and closed it almost at the low of the candle. Okay, this is a really good indicator that sellers are in control, and as you can see, it broke lows and never looked back. This is a really good opening range breakout play. So these are the 2 patterns I really like to see with these opening range breakouts. We have the one, so if we're looking to short, and this can go the opposite way, like say we were looking to get long and it opens below VWAP, but then pushes higher above VWAP and closes above it, that's a good signal that buyers are taking this higher, and we could look to take it long through the opening range breakout. Now, if these patterns don't happen, I still may take the trade if it ends up setting up, but these are my ideal situation, like patterns I want to see. If I see these, I have a lot more confidence in the trade. All right, so these are just a couple patterns I like to look for. Now let's look at trade management. This is really straightforward. The entry is always in the direction of the break of the opening range. So if we were looking to short, we are shorting through the lows of the opening range, and vice versa for longs. Stops are always the lower high of the opening range. So again, if we're shorting, then the high of that opening range is our stop. Now, when it comes to profit taking, you should be aiming for at least 1.5 to 2R for your first trim. Okay, all the data I've collected, this is generally a good area to start taking money. You don't want to take money off too quickly, which is still something I work on today. I'm always antsy and quick to take profit off. But ideally, you want to be leaving a majority of your trade on for at least 1.5 to 2R. And if you can get up to 3R, that's even better for your trailer. Let your trailer run and try and get 3R or more on the trade. That would be ideal. Okay, that's a really good goal to try and hit with your trades. But like I was saying earlier, is you got to keep track of the markets and how these are trading. Maybe markets aren't paying 3R at that time during maybe that earnings season, and you need to adjust your profit targets according. Maybe take them a little bit quicker at 1 and 2R. Okay, so that's why we want to keep track of these in our journal. That's basically how we trade these setups. It's very simple. We are looking, like if we step back and look at these candles here, we are shorting on the low of this candle and shorting on the break of this candle. Okay, this is a 2-minute candle, so we're waiting for the first 2 minutes to play out, and then we're shorting through the low, and our stop will be at the high. So right off the bat, we have a very defined and structured trade. We have our entry and our stop set in stone. Like our stop's always the high of that candle, and our entry's always in the low for the short. And then for profit taking, we're starting to look at multiples of R. Okay, so if we were risking $2, we're going to try and make 3 to 4 for our first trims, and then get into the 5, 6 for our next trims after that if we can get it. Okay, so that's how we handle trade management, and we looked at what I'm looking for as far as the pre-market action with the volume, the catalyst, the news, and then how we journal them, and then what we're looking for at the open to get involved. In the next section, we're going to go over a few examples and kind of walk through them, see how they played out, and what the pre-market structure looked like, the volume, and put it all together and run through some examples of how these play out.